All of us, we have the inherent urge of owning a real estate, right? That's something that we dream of from a very early age, and we put a lot of efforts so that we can achieve it at some point, right? And gives a lot of satisfaction and pride as well. Now, somebody who has actually owned or gone through the entire process of buying a real estate, he or she knows that owning a real estate is a lot of hassle, right? You first have to look at which builder to buy an apartment from. You have to compare different builders. Then obviously when you finalize a builder, then you have to go through a lot of documentations in terms of the buying process, and then there are different kinds of taxations that you have to give to government based on the kind of the state that you're buying the real estate from. You have to obviously go through the entire loan process if you're taking a loan, either individually or a joint loan. And then obviously when you buy a real estate, then after that the entire managing part is anyways there, right? And you have to continue paying taxes to the government. Now, the other aspect that we look at in today's world is about the rent yield. The yield that we get if we rent out our property, because our jobs keep on changing and maybe we shift from one city to another. And if you're not staying in your home, then how much of rent will you have if you buy a real estate in a particular place, right? Considering all these, often it deters us from even buying a real estate at some point, right? Now, what if I tell you that there is a much easier way in which you can invest in real estates, and you don't have to go through any kind of documentation or the hassle of owning a real estate and managing a real estate, right? So that's all about today's video, and the answer to that is REIT, right, which is Real Estate Investment Trust. This is a very liquid way of investing in commercial real estates, and the option have just started in India a few years now. And then obviously this is a space which is to grow in the future years. And it is only going to be more and more prospective to invest in this financial instrument. So without any ado, we would start off with REIT, and before we get started with the details, I would just want to show you that in our last video we went through the different pillars, 10 pillars of financial services industry, and we saw that one of the pillars is real estate finance, right? Now within real estate finance, if you see mortgage, banking, property management, etc., are also sub pillars, but then REITs is also one of the very important financial product we thought we would look into in details, and that's why we are doing today's video. So a REIT is essentially a corporation, trust, or an association who invests in the real estate and who owns and manages the real estate, right? So typically they are called direct REITs or equity REITs, and then there's also a second type of REIT which is called mortgage REITs, right, who don't own a real estate, who finances real estate, right? So two types of REITs, and the purpose is obviously for the REITs, they are owning the property, they are managing the property, but they are also sharing, they have also provided a way in which any retail investor can invest in those real estates through a kind of a share, which is called REIT, right? So you are also having a part of the real estate, but you are not taking up the hassle of buying, managing, or financing any of these properties. Now, when can we qualify as a REIT, right? And any association can't be a REIT suddenly one day, right? You minimum have to invest 80% of your overall asset in real estate, or so only then can you, along with the others. So you have to tick different boxes to be able to qualify as a REIT. So 80% investment in real estate. Then whatever income you're earning, 75% has to be either from rent or from the interest income. Rent for a equity REIT and interest income for a mortgage REIT. You need to pay out, by rule, 90% of the taxable income in the form of dividends to shareholders, right? So it's a very high amount that is paid out to dividends, and that is one of the things which makes REIT a very lucrative financial product, right? So apart from the capital gain income, you can also earn regular dividend income from REITs, right? Which is not which is higher than if you own a share, right, for any company. And because 90% of the income of the REITs, they have to share between their shareholders, right? And then along with that, obviously you need to have an asset value above a certain amount, which is 500 crores today. And then you have to declare your net asset value twice in a financial year. Your shares have to be fully transferable. So these are the boxes. And then there are some other ticks as well. I have mentioned the prominent points here, which you have to tick if you have to qualify as a REIT. Now, I was just mentioning that there are mainly two types of REIT. One is the equity REIT, where it's basically a direct REIT, right? Where the the association, they're owning and they're operating the income producing real estates, right? So you are directly owning, you're taking up the hassle of managing and operating the real estate. And then obviously you are, you're doing an income through the rents that you are getting from the different, shops or shopping malls or whatever kind of real estate you have invested in. And then the second type of REIT is mortgage REIT, where you are not, as an association, you're not buying any real estate, you're not buying or owning any real estate, but you're financing real estates, right? So you are paying out a loan to the builder, and then you are earning through the interest of that loan, right? So that's typically mortgage REITs. But you as an investor, you can invest in both the type of REITs. And then there's a third type of REIT as well, which is a hybrid REIT, right? Which is a combination of both equity REITs and mortgage REITs. Now, I was just mentioning that, you as a REIT, as an association of the REIT, you can invest in different types of buildings, and then they are office buildings, industrial buildings. It can be retail shopping centers or malls. It can be any healthcare facilities like hospitals, nursing facilities, etc. You can invest in hotels, resorts, data centers, infrastructure like cell towers, pipelines, etc. So there is no as such limitations of the type of real estate in which you can invest as a REIT, right? So that's very important to note. So what is the structure of a REIT? Typically structured as publicly traded companies listed on major stock exchanges. Income distribution, we already mentioned that you have to distribute 90% of your taxable income as dividends to the shareholders. Taxation, very important to note that REITs are typically themselves not taxed, but investors are always taxed, right? And the way they are taxed, I have invested a total different slide for taxation of the different incomes you are earning as an investor. So I'll deep dive on that. But something to note here is REITs themselves are generally not taxed. Benefits of investing in REITs. Now, portfolio managers typically always tell us that you need to diversify your investment into different, financial products. And what are the different financial products? It has to be shares, it has to be mutual funds, then bonds, then fixed income like your fixed deposits, then PPFs and EPFs. Today and these days you also buy gold, be it physical gold or SGBs like sovereign gold bonds. And then like that, REITs is another very important financial product with the help of which instead of buying a real estate by yourself, we can also invest in real estates and earn from that, right? So that's the way you're diversifying in income by investing in REITs. Then obviously something that has happened recently in this budget in 2024, which just came out about few days back, it increased the liquidity aspect of REITs, right? So REITs, till before the budget, the long term was considered as 3 years, right? So if you invest more than 3 years, then only and then sell a REIT, then you would get long-term capital gain tax. If it's short-term, you have to pay short-term capital gain tax, right? Now, as you know, after the budget, the short-term capital gain tax has become 20%, long-term is 12.5%. Now that 3 years has come down to 1 year in this budget for REITs, right? So now, hence the liquidity increase. So even after 1 year, 1 day, for example, if you sell a share, sell a REIT, in that case, you will only pay 12.5% tax and you won't pay 20% tax, right? So that's the way the liquidity of REIT just got increased a lot in this budget. Which is a very good sign for REITs. And then dividend income, I already mentioned that you would get a regular dividend income from REITs because REITs have to pay out 90% of their income and they have to share it with their shareholders. And professional management is a big thing, that you are not owning the real estate, you are not taking the hassle of managing and to know that which geography to invest in and what kind of property to invest in, so on and so forth. All those are being taken care by somebody else and you are just investing and earning from it, right? So that's the benefit. any market link product, there is always certain amount of risk and considerations to be considered. The market risk, which is the general market risk, that is always there. But for mortgage risk, something to consider is interest rate, because which if it goes up, then obviously your revenue will go up because you will earn more interest, and vice versa as well. Economic cycle is again a generic trend, right? You don't know when a recession or economic downturn will come, but obviously if you can foresee it, obviously you will invest accordingly, especially in those geographies. Because it's more a physical asset, and I mean, you will invest in those REITs which are investing in geographies which are more prospective in the coming future. And then obviously sector specific risk as well, right? When I say sector specific, I am mentioning these things, right? So which sector are you investing in, right? So say for example, in a country like India, where healthcare facilities is still a huge shortage, and there is a need of a lot more hospitals and nursing facilities, etc. And then if a REIT is buying real estate and then renting it out to hospitals in a good city where there is a need of a lot more hospitals, and obviously it's a much more income generating REIT, right? Similarly for data centers, right? So obviously we all know that the importance of cloud is increasing in many folds, and then data centers is also gaining a lot of traction in most of the geographies. So if you invest in data centers in good geographies, then it's a good income producing REIT for you. Now mind you, currently in India, the 4 REITs which are I'll just come to that, maybe we can deep dive at that point. So what I was saying is the sector specific risk is based on the what kind of sectors you're investing in, right? So only it will turn into a risk if you're investing in something where it is not very prospective in the coming future. Now, the other thing that I was mentioning is the most popular way in which REITs, can be bought and sold are in share markets. As stocks, it's traded in the leading trading platforms. But then apart from publicly traded REITs, you also have non-traded REITs, which are private market risks, right? Where you can buy and sell these REITs through brokers. And apart from buying and selling REITs as shares, you can also invest in mutual funds, who in turn invest in REITs, mutual funds and ETFs, right? So that's also another channel through which you can have exposure in REITs. Now, what are the well-known REITs which are there in the market? The yellow highlighted ones are the Indian REITs, and the top 3 which I have mentioned here, which are American Tar Corporation, Prolongis, and Simon Property Group. These are REITs in the US market, right? So the sector, if you see, in US they invest in different kinds of sectors like infrastructure, industrial, retail, etc. But in India, it is till now there are 4 REITs which are there in the market, which is Embassy Office Parks, Mindspace Business Parks, Brookfield India Real Estate, and there's a 4th one as well, which is Nexus something REIT. All of these they invest in commercial office spaces, right? And as of now, the sector within real estate which is traded in the market is commercial office spaces. But in US, it's already diversified into different types of sectors, and you can see here infrastructure, which is cell towers, communication infrastructure. Then for Prolongis, it's about warehouses, distribution centers. For Simon Property, it's about retail, right? So they are already investing in different types of real estate. Now, if I was just looking into a REIT a while back. So this one is Embassy Office Park REIT, and if you see over a period of 1 year, it has given you about 20% return, right? So the price was hovering around say 290, 300, and currently the price is about almost more than 380, 390, right? So it's a good income. It's a fairly good income, and like any other leading shares, and much more than any fixed income that we have in India. Obviously, if you lesser the time horizon, the amount of return will come down a lot. But if you hold it for a substantial period, then REIT is going to be a good financial product for you, right? Now, again, repeating that the option is limited today in India, but if you go outside India, then there are a lot of REITs which are traded, and you can choose your sector within real estate as well, where you want to have more exposure and buy that kind of a REIT. Now, when you go ahead and decide that what REIT to buy, for a share, for a share in the share market, we typically look at KPIs like earning per share. We also look at the specific P of the company and the P of the industry, and then we decide that which share to buy. Now, for REIT, it's a little different, right? So it's a pure real estate product, and hence we look at funds from operations, right? So we look at that how much of cash is getting generated by a REIT operations. And that's a very good indicator how a REIT is doing, right? So when we look at the cash generation, we exclude the depreciation and amortization, because again, we are considering real estate here. So typically depreciation and amortization will always be there, and we need to exclude when we are comparing different REITs and how much of cash is getting generated by that REIT, right? Because again, why cash generated? Because dividend income is one of the key income that you will have at a regular basis, along with capital gains as well. And then there is another KPI which is even better than FFO, which is adjusted AFFO, right? Which is also subtracting the capital expenditure and the routine maintenance cost, right? So say obviously there is a huge capital expenditure investing in a real estate, right? So if you subtract that also from your say yearly cash flow, and also you are subtracting the maintenance cost for the year, then you are looking at pure cash flow only, right? For that year, for that REIT, right? So typically when you compare adjusted funds from operations from different REITs, it will give you a very good idea that which REIT or which all REITs to go for, which will give you better dividend income and better capital gains over a period of time. Now, before ending, we would look at something which is most important from you as an investor in REITs, right? So, what is the taxation, right? And we already looked at that. What kind of REITs should we invest, and how do we look at that? Which REIT to invest. One very key parameter to decide that how long to hold the REIT and what kind of REIT to invest is the taxation, right? Especially in countries where the taxation is on a little higher side, like India. So there are, we were discussing that there are two main types of ways in which you can earn from REITs. One is the rental dividend income. The other is the interest income. Again, rental income for equity REIT, interest income for a mortgage REIT. And then apart from that, obviously you can also earn from capital gains from that REIT, right? So when the price of the REIT itself increases over a period of time, and then you sell that, obviously you will get the capital gain out of that REIT. Now, rental or dividend income and interest income both are taxed in India based on the tax slab you fall, right? So if you are in a 10% tax slab, or a 20% or a 15% or even a 30% tax slab, in whatever tax slab you fall, whatever income you are doing out of rental income or interest income, based on if you hold equity REIT or a mortgage REIT, you will be taxed based on that rate. And then obviously at source, which is the TDS, tax deducted at source, will be 10%, and the rest percentage you have to pay when you are submitting your return at the end of the year. And then capital gain tax is exactly same as in the equity market, for shares as well. That is, if you're holding it for less than 12 months, if you're selling it within 12 months, then you will be taxed at 20%. If you're selling it beyond 12 months, I think there's a mistake here, which was 36. I forgot it to update to 12. So it will be 12 months, right? So beyond 12 months, it's long term. If you're selling it beyond 12 months, then it is 12.5%. So the taxation is much less if you hold for 1 year and then you sell after 1 year, which is considered as long term. You are getting taxed at 12.5%. But if you are selling it within 12 months, say if you buy it today and selling it, say after 4 months, 5 months, whatever, till less than 12 months, you will be taxed at 20%, right? For long-term capital gain, again, the rule for that provided the gains exceed 1.25. So recently, all these years it was 1 lakh, but in the budget recently it has been increased to 1.25 lakhs. So if your earning is still 1.25 lakhs from both either rental and interest income and from the capital gain, if it is within 1.25 lakhs, then you won't have to pay any tax. If it is beyond 1.25 lakhs, then only you will have to pay 12.5% tax on the income that you have generated, right? So that's how REITs are taxed, and your different incomes from REITs are taxed, right, in India. So that is all that we wanted to cover today. I hope you got a good 360-degree view of the REIT, of a REIT, right? And how REITs operate, what is a REIT, and what kind of a financial product it is, whether you should consider it, how to analyze it, and how you will get taxed if you buy a REIT, right? If you buy and sell a REIT, right? Based on the kind of time horizon that you're holding it for. So thank you for your time today. I would request you to kindly like the video if you are liking our content, and then also subscribe to the channel for more such content. So I'm continuing my financial services journey, and the next few videos you can expect something interesting like this in the financial services world. Thank you for your time.